Okay, I know I tweeted that we are supposed to follow Ichimoku and I had shown you the entries, but I forgot to tell you about the exits. So here is the exit video. Let me just create some bar pattern so that I have, we'll keep it here and we'll start and see what exactly happens. Right, let me maximize this. So how do you exit using Ichimoku? We'll just play it live and see where it takes us, right? Okay, so at this point of time, it has moved out, broken out, right? This candle. So let's say you're entering the long position at this point at 43. Let's see what happens. You're in loss. You're making profit now. You're in loss again. At this point, you can see, so you finally exited the trade with a profit. How much you entered here, and you made the closing of the candle is here. This was the profit you made, right? This is the profit you made. And why are you exiting now? Because the candle has touched the fast moving average. That's it. This is the logic. When the candle touches the fast moving average, you want to exit at that point. Now, can it go up after this? Sure, but that's a risk you're taking. The safest exit at this point is when the candle touches the fast moving average. In short, this video is pretty much over. I am just going to continue. So if there's nothing else that I'm going to teach in this video, I'm just going to play some more examples after this. Let's look at a sequence where there is another overlap. Okay, so we'll go back again. I think this would be a good touch. So you can see here, it's okay. So let's say you're opening a long position here at 47,900. Let's see what happens. You're in loss, Well, you have to exit the position in loss in this case. There's no other choice because it has already touched it. Now, can it go higher in the next candle? Yes. Now, do you want to play it? Again, it's up to you. But per the rules, you always exit at this point. Now, the reason why this one was so difficult is because I have to maximize it. But like if you had considered the overlap at this position, you probably would have entered here instead of entering here, and you would have been in profit, if it makes sense. So again, this line is too difficult to see. You will have to probably zoom this thing in like majorly and see when the real overlap had happened, but I'm pretty sure the overlap happened here and you would have been in profit. We'll just continue and wait. Again, now this time the blue has gone under, but it's above the cloud, so we can't take this trade. Let's continue. Okay, so at this point, right, the overlap, this thing crossed over. So let's say you have entered the trade at here 48,737. So in the next candle is red, you make loss. Now you're in profit, still profit. Now you're in loss, still profit, still profit. Okay, so at this point again the candle has touched, right? What was your net profit? Your net profit is here. So if you were to use the rules of Ichimoku, this is the profit you would have gained, if it makes sense, right? Like this is the profit you made if you had entered here. I hope this clarifies, which is why I would much rather you do ATR, right? Let me open this. So let's say, imagine again, let's go back and do it with ATR and see what would have happened if I had instead used ATR here, right? So this is the point I'm entering. So let's do the long tool, long position here. I open my long position, and now I want to set the short side and the long side. So I'm gonna say what's my nearest support here in 4-hour resistance? I can see my nearest 4-hour support comes here, right? I'm gonna draw this line here, and this is the line I want to match. So I'm gonna drop my support stop loss here, and then I'm gonna see, okay, what's my ATR? 1,000 points. What's my stop? A 500. So that's 1,500 I need to drop, right? So I'm gonna drop it to 1,500, and I'm gonna play it within this boundary. Now again, if you are like, you're kind of a person like who says, hey, no man, this stop loss is too much for me, then obviously you can always take the nearest support, and I have drawn this, and you can keep this as your stop loss. The only bad side is that you may get kicked out of the position at this point, but if you keep it here, you will not get kicked out. So let's expand this and see how it plays out in this range, right? And wait, and what we are going to do is we are going to keep the risk reward ratio the same. So we can keep it 1.2. 1.2, 3, 2, 1, 1.2. So this is my risk reward ratio. I'm taking the reward as 1.2 times this stop loss. Let's see how it plays now. So basically you've kept the take profit here, right? Like, let me just mark this line. This is your take profit. If the price touches this point, you're going to take the profit. Let's continue. The first candle is red, second candle goes green. Well, no change. Whichever way you approached, the price never reached your greed level. Unfortunately, you had to exit with a minute thing. So we can try something else again here. See if it helps us in decision making. Let's continue and try to find some other setup. I mean, yeah, see, now it's coming. I should not have deleted it. Let me see. Yep, now it reaches my level. But again, this is where the whole beginner and advanced comes in. If you're a beginner trader, you must exit when the price touches the fast moving average. But let's say you're an advanced trader and you're like, hey, you know what? And again, like, look at this. Let me just play this example one more time. This is an important example. So we are here, right? And I'm going to continue playing it. So at this point, the fast moving average has been touched. If you are a beginner, you will leave. You will collect your profit of this much, right? This is your profit margin because this is where you had entered, and this is the close of the candle when the fast moving average touched it. You exit at this point, and that's it. But let's say you're an advanced trader and you're like, no, I'm gonna play this. I'm gonna play this for some more time because my stop loss is far away. And the price has not even shown that it can come and touch my support. So we'll draw this. Okay, so now imagine if you had kept your stop loss at support, right? Imagine if you had kept your stop loss and you were not using ATR for whatever reason, you would be kicked out of the position and you would actually leave with a loss as big as this. Like, this would be your loss statement. Now imagine that you actually followed what I'm saying and you kept your stop loss here. And what would happen in that case? Well, you know, your take profit gets kicked in. You take the profit, you walk away with zero loss. That's the entire gain on you, and the trade is successful, right? So this is where the strategy that I had taught can be combined with Ichimoku, but again, only for advanced traders. If you don't know what you're doing, don't do it. If you think it's risky, you're better off not doing it. So let's come back and see if there is any other setup on the downside or on the plus side. Can't really take any trade here. Okay, so at this point of time, I can see there is an overlap. Let me just go 2 candles back. Okay, so let's slow it down and play it. This is where it's touching. This is where, yeah, we can say that, hey, I'm going to enter a long position here. Pretty much it's outside the cloud. If you can see minutely outside the cloud, the price is above the cloud. this is a good enough indication that you can enter long position. We're going to again use the long tool here. We're going to set up the margins. What is the nearest support? Well, this is the resistance. Wow, it perfectly aligns. The nearest resistance I would say is this, right? I mean, we can even keep this as a resistance, but yeah, I think this is solid. Like, yep, this is solid. So this is your resistance line. What is my ATR? My ATR is 885 pips, so I'm gonna just drop it to 885. And this looks good, and I'm gonna play it at 1.2. Is this 1.2 or not? I can't even see. It's 1.29. We can put this at 1.2. Yeah, I think this is good enough. So let's play this with all the setups, right? This is my let me also draw the line so that people are clear what I'm trying to do here. Yeah, this is my main resistance, or this is my secondary resistance. You know what? I will just still add it. I'll make it 1,000 points. I will remove this as resistance and I'll keep this. And what else? Yep, and was my risk to reward is 1.05. I'm gonna increase this to 1.2. Yep, so let's play it out and consider all the examples. In here you're making profit. So let's say again you did not listen to me and you had put this as your stop loss. What would have happened? It would be triggered by now, and you would be exiting the trade with a loss. And how much would your loss be? Your loss would be all the way from here to here. This is your loss statement, if it makes sense. So, but now let's imagine that, hey, you're going to put a stop loss here and you're going to play the whole bracket. Let's see what happens. It's going down. At this point, it has touched. Now, if you were to follow Ichimoku rules to the T, you would once again exit. And since this has also crossed it, you're walking away with the entire loss in this case. Yeah, nothing can be helped. Trades cannot be 100%. But this is how it is. So, next one, we'll try. Man, this was so good. Like, I have to say, this was so good. It literally took out the ATR and the stop loss. And, like, look at this shit. Like, and then it goes on to hit the 1.2. Like, man, like this is where like the market can actually like game you. Like we even added ATR to the stop loss and you get kicked out of your position. Just like one candle kicks you out and then you go back and hit your profit. So yeah, I mean, I would definitely suggest adding ATR. Like probably, I don't even know, probably 1.5 ATR, but then you'll feel like the stop loss is too high. So again, depends on you how you want to trade it, but I would sincerely suggest like not keeping your stop loss on the support. Like you will get kicked out multiple times and it's just like stupid in my opinion. But either case, I mean, if we had probably like maybe it's a mistake that I have made here, that I have not considered the resistances properly. Had I considered proper resistances, maybe my ATR would have been lower and I wouldn't have been kicked out. But you get the drift. Like a proper support and resistance is super important in determining your exit and then adding ATR to it, because you have to consider the volatility in the market. We can try one more time and see if there is any crossover. Holy shit, what was that? God damn. It's a 12,000 drop. Ain't no one surviving this. Okay, I'm not playing this. This is crazy. But you know what? We can actually play it. Why not? Why shouldn't we play it? We'll play it here. Okay, at this point, I have no idea what has crossed what. Like I can see just a straight line. I'm not taking this straight. I'm not shorting it here. I still have no idea. Okay, finally I have an idea. I'm gonna enter my short position here at 46,000 and let's see what happens. Oh shit, I forgot to add this. Let me just finish this first. I want to put this candle here, right? And this is the short position I'm opening at 46. Let me open the short tool now. And let me make it smaller. Okay. And let's look for the nearest resistance. Nearest resistance is here. So I'm gonna, but the price has to go up, right? Yeah, this is the nearest. And what's my ATR? 1400. So I'm gonna just keep it 1400 at this moment. And I'm gonna run this. What's my ratio here? Profit 1.43. That's too high. Let's not get greedy. 1.2 is good. Okay. So at 1.2, I'm going to enter this trade. I have shorted it. So let's see what happens. So again, if you had followed your support lines, like you would have already exited the trade. If you are following Ichimoku exit, you would have exited the trade at this red candle. I don't know why this keeps popping up. You would have exited the trade at this red candle, but you're still playing. Okay, very, very close to the target. Hopefully you were not hit. And your target is hit. Look at you, making profit thanks to ATR that saved your butt, did not allow you to exit your position, and you were able to exit here. Hopefully, with these examples, it makes sense. A, how you use Ichimoku to determine your exit. If you have already collected your profits, use the Ichimoku guidance tool, the fast moving average, to exit. Otherwise, whatever trade you make, I cannot stress this enough, use ATR. Otherwise, you're just putting your money out there for burn, and you will get kicked out of every trade for absolutely no reason. Hope it makes sense, and hope you guys liked it.